Welcome to the Foreign Correspondents Club of Thailand. Today's event, another online event, is on cryptocurrencies and the technology that they are based on. A lot has happened in this realm, not just over the past decade, but also just over the past few months. Famously, 10 years ago, a guy named Laszlo Hanye purchased 2 Papa John's pizzas with 10,000 Bitcoins. Today, that bundle of coins would have been worth $320 million. So today we're asking the question, how was that pizza? No, sorry, I couldn't resist that. But it does make you wonder. Today, seriously though, we're asking the question, what is going on with Bitcoin? A few weeks ago, it climbed up to $42,000. And now we want to ask the question, what's going on with this coin, other coins, and the cryptocurrency market and blockchain in general in 2021 and beyond? So to help answer that question, and the questions that we are inviting from our audience to help us look into this crystal ball are 4 very knowledgeable experts on different aspects of this very complex subject matter, which is starting to take our technology and financial sectors by storm. First, we've got Alan Laubsch, who's beaming in from Portugal. Alan is the managing partner of Planet Positive Ventures. His earlier background is Wall Street and the big banking world. Alan is an internationally recognized risk management thought leader and impact investor. He established the natural capital market at Swiss-based Like, where he pioneered blockchain-based forestry and carbon-backed tokens, including Treecoin. Years ago, Alan told anyone who was willing to listen to buy Ethereum when it was only costing $10 a coin. Ben Scherrey, founder of BiggestFan, is an American computer systems architect residing in Thailand, and he's an expert on the decentralized systems and technology that are behind Bitcoin. So, for example, Ben can speak to, among other things, the cryptography that makes blockchain so powerful and potentially revolutionary for the 21st century. Ingo Puhl, managing partner at South Pole Carbon Asset Management, is an expert on technology innovation and market diffusion in relation to the sectors of energy, food production, and information technology. Having spoken to Ingo, I can tell you that he has profound insights on when and how innovations may go from risky pioneering ideas to mainstream realities. So right now he's analyzing and projecting what may happen next in this very sector. And finally, we have Sanjay Popli, who's the CEO of the company Cryptomind. Sanjay is one of the pioneers of Thailand's blockchain and digital asset industry. And having spoken to Sanjay, I think he's the kind of person you do want to consult about the crypto market. My name is Steve Galster. I'm a board member of the FCCT. I'm not an expert on either cryptos or blockchain, but I have dabbled a bit in both. The organization that I run, Freeland, which counters trafficking, and our partners in the End Pandemics campaign are starting to use blockchain and digital tokens to track and reward impact, which is something that Alan Laubsch inspired us to consider. So I do understand enough of this stuff, but I'm also sufficiently ignorant of the details to be able to facilitate this discussion today in a way that I hope shares useful knowledge with our diverse audience out there. We're going to start by playing a 2-minute video before we do a deeper dive with our excellent panel. Apologies up front for any language that may offend in this short video, but I think this little clip puts our topic into the right perspective in the simplest way. And David, if we could just go to that video now. Thank you.
Redskins, dodo heads, tepid lemonade. Get out of it. Redskins, dodo heads, tepid lemonade.
Hey, mate, I'll take 5 of your Redskins and one of those tepid lemonades.
It's one chicken, mate.
It's not a chicken.
No, no, that's much better than a chicken, my friend. That is gold.
What?
Gold. The currency of the future.
Great, come back in the future.
Ratskins.
But no, mate, I don't think you understand. This has unlimited use.
Can I eat it?
No,
Can I wear it?
no,
Can I use it as firewood?
no.
It's starting to sound pretty limited, mate.
But you can melt it and then turn it into whatever you want.
Can I turn it into food?
No, you can't eat it.
Is this going to take long?
Hold on your horses, mate. We are dealing in futures here.
Oh, what's that? Is that a rock?
No, worse, it's cold.
Oh, cold. How do I get some cold?
Gold. I have people mining for it.
Oh, you have people. La-dee-da. We got a rich one here, eh? What do you pay them with?
Gold.
Next!
No, they say that this currency could be worth 1,000 ratskins, maybe even more, in just a few years.
Says who?
The people with gold.
Fuck. Next!
Look, every economy ever has been controlled by the big chicken banks.
Next!
And this is our opportunity to get out from under the big chicken boots,
Fuck me.
shake up the market, and start taking back our economic independence. Are you with me?
No.
Really? Come on, man. Look, all my mates are doing it.
I'll just get your hand off it, all right? Everyone's trying to predict the next alt rock. First it was stone, then bronze, then iron, now gold. What can I even do with this shiny shit? Make fucking jewelry out of it or something?
Yes, you can do that. Great idea, because it's malleable. And, best part of all, there's fuck all of it. It's a finite resource.
Mate, I'll tell you what a finite resource is. My fucking patience, all right? Now, piss off!
You know what? Stuff it. I'm taking it back. It's like talking to my dad.
Yeah. Why don't you go discover avocado and smash it on toast, you dickhead?
Yeah, maybe I will.
Sorry, mate.
I'll have a dodo head, thanks.
Half a chicken. Piss on me, not you two.
Oh, no. This is way better than gold. It's silver, or as I like to call it, light gold cash. It's faster to mine. It's...
Got to be the last one, surely. Ratskins, dodo heads, very tepid lemonade. Get it here. Desert warm.
Okay, so let's go around our Hollywood squares here and ask our panelists to say a few words about what is going on with cryptocurrencies and blockchain in this new year, and where are we going next? Why the recent roller coaster ride in prices of Bitcoin and other coins? Is this whole thing real? Is this a bubble? What can we expect from regulators? Answer any or all of those questions. Alan, let's go to you first.
Thanks, Steve. Hey, everybody. And yeah, it's nice to think about this topic again. Yeah, what's going on? Is Bitcoin in a bubble? I had a conversation about that recently with one of the pioneers in high-frequency trading, who gave a simple response looking at the order books around. This is there are many large institutional buyers, and looking at whether this is a bubble, we're seeing that Bitcoin is not anywhere close in terms of the Google Trends of the peak in 2017. So it's been a silent bubble. The bubble is expanding, and the drivers of that are multiple. Right? We have a situation in which trust in currencies has been eroding. We've seen Corona wreak havoc around the world, and governments have been struggling to keep their economies going. If push comes to shove, more money will be created, and a lot of dollars and euros and other currencies have been created. So it's a situation where people have been looking at gold and silver, as your video shows. But there's something else as well, which is cryptocurrencies, which have some very interesting characteristics that differentiate themselves from other investments as well. As opposed to just being a store of value, which I think is kind of a poor argument. I view cryptocurrencies as kind of an insurance on the existing systems. It's a new decentralized system, and centralized systems fail eventually, right? As a risk manager, this is the key message. It's not if the system will fail, it's when it will fail. If we look at all the major currencies in the world, the average tenure of a currency is about 26 years. They fail all the time. Having a nation back a currency is no guarantee. As we can see, even the largest, most powerful nations in the world are on shaky grounds in many ways. So what we're seeing here is a distributed system in which there are multiple players, in which everyone can participate. With Bitcoin, we have kind of a bank, but not a bank in which there's shareholders and profits that need to be paid out to shareholders. It's a situation where everyone becomes a co-owner, right? And this is, I think, a very, very important aspect to consider. Finally, the last thing I'll mention is that we have essentially a way in which we can distribute value and engage communities in a much better way. That we will see in this time, this kind of internet of value revolution. Very similar things that happened during the internet boom. In fact, the adoption rates are very similar to the internet. So we will have new Googles, Amazons, Ubers, Airbnbs, and so on. But they won't be owned by one or two entrepreneurs and a few wealthy shareholders. These communities, these will be more like communities, decentralized autonomous organizations in which everyone has a share. So it won't just be one Mark Zuckerberg, but there'll be an entire community controlling these things. So the wealth creation will be also much more decentralized. The engagement will be much more decentralized. Everyone is empowered to be an owner. And I think that's a very positive message. So yeah, just a few thoughts to kind of kick off the conversation, and looking forward to the contributions of my other panel members too.
Thank you, Alan. I've got a follow-up question, but I'm going to wait till we get done with all our speakers. Let's go over to Ben. Ben, you're not a cryptocurrency trader. You're more interested in the technology behind it. What are your thoughts on where we're at and where we're going?
Yeah, sure. So I'll kind of speak to how I got involved with it in the first place to give my perspective some context, right? So in the 90s, there's a bunch of us tech guys who are into crypto. And we're talking about cryptography, not cryptocurrency. There was no such thing. And trying to look for, some sort of electronic replication of cash, right? You needed something that's going to be peer-to-peer, need to be fungible. The technical questions were like, okay, well, if you could see data, right? If you can get hold of some data, you can copy it perfectly and then submit it to somebody else. How do you stop people from from double spending data, just from copying data and say, here's my money and do that. And public and private key encryption, which were starting to be all the rage back then, was the nice solution to it. If it wasn't signed by you, then everyone knew that it wasn't yours. It couldn't be faked. But that still didn't solve the problem of being able to, create the same transaction multiple times being signed by you and having the originator be fraudulent. That's what we call the double spend problem. Mm-hmm. And there was one of the first not cryptocurrencies, but electronic currencies was an attempt to do digital gold. And the guy actually had a video camera 24/7 of the gold in the vault saying, these tokens, which are signed by this mechanism, are backed by this physical gold. And fortunately, the government went in and arrested the guy and shut him down for making his own currency and breaking federal law. Also note at the time in the early 90s that any kind of encryption that was above 48 bits, like for your browser, for your SSL or whatever, was declared a war munition by the United States. You could not export it, or you'd be guilty of exporting, like atomic bombs and stuff like this. And so it put Americans, way behind the rest of the world in developing and improving cryptography. And in 1999, that finally changed. And it just got out of hand, and the whole world was doing it, and everybody could do it but the Americans. And so there was a lot of different attempts. And this Satoshi Nakamoto fellow comes up with this concept of mining using this proof of work, having an independent group of people who are not actually involved in the transaction to reach a general consensus across this vast decentralized environment to determine what was the finality of these transactions. So it's like a giant general ledger in the sky. And that was relatively, that was pretty revolutionary. And around 2010, I realized that this is kind of a real thing. This could be the way that this gets done. And so I started getting involved in Bitcoin specifically. And then you could still do mining and whatnot. And then the price actually hit $1, and we were all going like, "What the heck's going on? Why are you people? We're just playing with stuff here. This isn't for real yet. We don't know this is for real." And then the time when it got somewhere between $10 and $40, all the conversation went away from how this stuff works and what to do with it to how much is it going to cost and how much is it worth, and everyone trading it, and then everybody and their brother trying to make their own coins. And frankly, up through 2017, 99% of everything crypto related was scam coins. And so we had our bubble, 2017, 2018, and that was a bubble. Now, are we in a bubble now? Well, I would say that real bubbles, like tulip bulbs, real bubbles don't come back. So, I would, there's something there. It's addressing issues. Alan, I concur with basically everything Alan said. I don't want to repeat what he said. But there's real fundamental existential issues regarding money and what money means. Money should be a consistent unit of measure. If you believe in the information theory of money, right? Money is a fixed unit of measure for value of economic transactions. If you know that your money is secure and safe, you can invest in the future, and the risk is the risk that you can control. And if you believe in yourself, you can take that risk and you'll make a profit, and the money that you get back in that profit is going to be as valuable as it was when you started. What happens instead when your money becomes flexible, like what's happened with the Fed, the United States is the primary one, but all kinds of countries have similar issues where they inflate their currency. Then the amount of time forward you can, the amount of time out you can invest becomes very limited. So people run away from doing investments that are going to create jobs, run away from investments that are going to create wealth, and they're going to go straight to assets, and they're going to go into property and stuff like this. And right now, Bitcoin operates more of a store of value than it does a currency, even though it can legitimately be a currency. So this running into assets with all this cheap money that's around, I think has pushed up the price of Bitcoin. Now, when we see the price, hit 40,000 or whatever, however many dollars it is, and people say, well, what is the real price of Bitcoin? There's not a real price of Bitcoin. I think that's reflective more of what the price of this fiat currency is. Bitcoin is like a startup investment. It's not, it's something that you get involved with and you hold on to for a long term until you see it come to be or go away and evaporate. And you'll know that Bitcoin has a price when you start seeing real world services and goods denominated in Bitcoin instead of fiat dollars or fiat yuan or whatever. And so this is, this is where we're heading. Coins are just one little simple minor application of cryptocurrencies. And I think, I think I need to let the next person go on. But that's where I'm coming from on Bitcoin with technology now.
Yeah, very good, Ben. And we will come back to you. I've written a couple things down here that I think you specifically could answer. But let's get the big picture first. Ingo, let's go to you. You're our expert on innovation.
Yes. So, and I have a couple of slides to just to illustrate the points that I'm trying to make. Is if you understand cryptocurrency as a technology, what we have seen again and again is, of course, better technology replacing old technology, whether from the transition from horses to cars, from phones to mobile phones, and now, and this is actually the center of my attention, the replacement of fossil energy technology with renewable energy technology. If you look at the take-up, here I go to my next slide. Can pull that off. Yeah, here we go. This is basically kind of like in the innovation community, something that has been shown again and again. It's become kind of like a method. We're seeing this kind of a adoption of new technology. We start with an idea by some innovators, and then we see the take-up of a technology by innovators that basically goes to 2.5% of the use potential within the market that this technology is addressing. As innovators, there are risk takers, the opinion leaders, highly educated. They're plugged into the latest insight on technology. And they're making their investments into that space, being prepared to take 100% of the loss risk. Then in many cases, it happens that like people get overexcited about a new technology, get very dreamy. They have these inflated expectation. And then usually what happens after that initial enthusiasm subsides a little bit, there's this phase of disillusionment, which is actually, disillusionment is kind of like the hype is gone, and then there's this question: is this the end of that technology? Basically, was it just a pipe dream? Does it really not translate into actual use, or is there real use? Because what happens in this phase of disillusionment, in the so-called chasm, is that a lot of iteration happens. It's like it's a phase when either early adapters are taking up that new idea, that innovation, or they don't. And early adapters are more risk averse. They are more looking for the bottom line in a technology. Does it really have something to offer that is better than the current technology? And if the answer is no, an idea just goes away. But if the answer is yes, then this phase is called the enlightenment phase, and the technology comes back. It goes into early adoption, into real use. It then basically passes this 2.5% use potential, actual use, and goes to about 15% of penetration, the use potential, at which point it's basically deemed as a proof of concept. It's kind of like real. And then we see early and late majorities adopting the technology. It becomes kind of like the new status quo. And then after that, after the late majority joins, it's also the laggard, and basically the new technology replaces the old technology. It happened to horses in relation to cars, happened to fixed line telephony, and in relation to mobile. There are many such examples. We see it now happening in renewable energy. Now, what happens if we apply this to crypto? And so I've done an analysis. It's not the data that you see on the right side. It's not a very high resolution data. But what you see in the top right slide is the market valuation of cryptocurrencies in $1 billion compared to the overall value of liquid money. It's also called narrow money, or for economists it's called as it's M1. So the M1 line is the red line. What you see is basically, as the world economy grows, that money supply has also steadily increased. By the way, this slide is from 2015 to 2021. And what you see, and this is also coming back to Alan's point, in COVID, basically, because it's a global phenomenon, you see a substantial increase of the supply of narrow money. We could have an inflationary tendency. It's a COVID response. If you plot against that the overall value of the cryptocurrency, and then in the bottom slide you basically just see the percentage. It's basically crypto valuation divided by M1, and this is the diffusion rate. Basically, if we say that the purpose of cryptocurrency is another liquid money asset, what we see is that in the hype, though, the first spike, that is 2017. So that was the peak of inflated expectation. What you see after is the disillusionment phase that happened to crypto. And what you see now is the enlightenment phase. Because what has happened since? If you look at the evolution of wallets, of Bitcoin crypto wallets. In 2015, and this is what I've shown on the bottom, it was 2.8 million wallets. That figure increased to 10 million wallets. But then the interesting thing, it didn't stop. Even through this disillusionment phase, the number of wallets went up all the time. In 2020, we were at 44 million, and in 21 at 65 million. That means there was take-up, not reflected so much in the value of the asset, but in the number of users. No? And what we are seeing now is with the discovery of the first real use cases, and I would count the decentralized finance community very much into driving that. We are now discovering the discovery by early adopters of the value of that technology, or also the adoption of Bitcoin by by PayPal, for example, which justifies the conclusion that we are now in this enlightenment phase, and the green dot marks the point again where crypto surpassed 2.5% of the value of all M1 in the world. No? And I believe that, basically the analogy is valid. No? Kind of like the standard tools to measure innovation diffusion are applicable, which suggests now that going forward, we'll see a continuation of that. No? That means we'll see the next diffusion to 15% of the valuation of M1. No? And now, considering the particulars of the design of Bitcoin, basically the limitation on the total numbers of Bitcoin that there will ever be, which is 21 million, and the fact that 18.3 million of that has already been issued, means that the increased value overall, in shares M1, must be reflected in a substantial increase of the value of the price of Bitcoin. I mean, similar is true for Ether, right? So if this theory is correct, we would be in for future substantial value increases. If the of course, and I've just looked at it from the lens of this innovation diffusion. Okay, thanks.
Yep.
Back to you, Steve.
No, thank you, Ingo. Really interesting. We'll come back to this point about, how risk takers go from, pipe dreams to mainstream. And you've shown us a chart, horses to cars, cell phones, internet. Some of these paid off, and you're basically arguing that it's looking like, and Ben said the same thing too here a moment ago, that, real bubbles don't come back. So let's go now to Sanjay Popli, the CEO of Cryptomind. Sanjay, you are a cryptocurrency trader, and you also are an expert on, how to advise others. We've got a lot of questions coming in on this, but, what are your thoughts on where we're at, where we're going?
So maybe I'll start off quickly from where we were last year first. So last year, we seen a lot of COVID happening, a lot of country printing money all around. So including US, Thailand, they were doing a lot of helicopter money, I would say. And the real ethos of Bitcoin is to have a truly open network where every is public and it can't be controlled, right, by any regulator or any certain identity. So before we go back into what happened last year and where we're going as well, just talk about a little bit about the whole narrative of Bitcoin and cryptocurrency. So we had the peak of the boom in 2017, where the pricing ran from $6,000 in December of 2017 to around $20K in Jan 1st of 2018. Then we had a long crypto winter. I would say everything price was crashing. The market was very, very saturated. I go to conference all over the world. Some people had left the industry. So between 2018-19 and then became last year was 2020, where I think we clearly see what has picked up again. So the first narrative of last year was Bitcoin was supposed to be a hedge, right, against fiat currency and alternative investment against the risk. So what happened in March was also interesting. When we had the COVID situation globally, you can also see the crypto price also crashed down from like $8,000-9,000 to around like $5,000 within 2-3 days. That was during the 13 to 18 of March in 2020. So then I think the price slowly picked up, including like when we happened to have the narrative of in May where we had the halving of the Bitcoin. So everybody was looking toward that. And then after the halving, it's kind of like party poo-poo again, that the price didn't go up immediately after the halving. So the halving scenario was a lot of people expect the price to rise after the halving, but it rose a bit after, I think, during the peak run of late last year where we had. And then after the halving in May, right, we had the mini DeFi boom. So decentralized finance was a big topic last year. The total value locked in decentralized finance right now is around, I think, 28 billion, if I'm not mistaken, from where we had nothing in the DeFi zone of this innovation just started in 2018. So within 2 years, there's like 26 billion in the decentralized finance world, which is gone through like smart contract and like middleman of platform and allow user to really hold their asset. So after the mini DeFi boom in, I would say, ending of September, again, the narrative became like a lot of people were looking for a place to store cash. I think like globally business is down, as we can see in many industry, right? Like airline, hotel, small businesses are suffering all over the world due to the coronavirus. And I think the lack of money, velocity of money, where people don't know actually what to do with that money. That's why I think the main focus of that is where the money flow comes into a lot of tech stock as well, and as well into the cryptocurrency. Then after that, we had like company like Square, which is buying Bitcoin to keep it as the company reserve. Then we have PayPal, allow user to access to Bitcoin. Then we have people like MicroStrategy and Grayscale, where there are a lot of institutional investment. I think right now it's like a couple of billion already investing in Bitcoin, and they're also opening up in other currency as well, apart from Bitcoin, like Ethereum, Litecoin, and whatnot. So I think we've seen a lot of institutional player coming in last year, which is a big change of narrative and view as well of cryptocurrency and Bitcoin, where a lot of these people were against it initially. And I think they have a change in tone as well. And they see that this is something worth taking a look at, and it's a real store of value and is where the future is. So the funny thing about Bitcoin, I would say, is it was designed, it was in a concept, it sounds very good, that it was not supposed to work, but actually it worked pretty well. And people has been using that, and DeFi is growing, as we can see in the latest boom as well. Like within the last run up of like 20K, we reached 40K last beginning of this month. We've seen a lot of new innovation in DeFi related sector within the cryptocurrency space. For example, one of the project our company has been monitoring closely is Alpha Finance, where it allows people to do farming with leverage as well. And a lot of people also see opportunity in this yield farming, where you act as a liquidity provider and then you get like a interest rate. It's like back in the day, I heard my mom told me like the interest rate at banks are at like 10 to 15%, whereas right now you can't even get like barely 1% is already a bonus. So I think this year is also very interesting to see where we go on this narrative. I think personally, I think a lot of institutional will be coming in globally, not only in the US side. I think Singapore, Hong Kong, even Thailand side, you're going to see a lot of bigger players jumping in. Like for example, in Thailand, there's already been talk about the SEZ stock exchange doing a digital asset with KBank, KBTG Group. We've seen SCB 10X, like subsidiary of SCB, invested heavily in DeFi related project. For example, 10x invested in Alpha Finance and also have invested in BlockFi as well. And then we have seen a lot of narrative where bigger players, for example, one of the subsidiary of CP Group also bought in Upbit, one of the crypto exchange from Korea into Thailand. So I think even in Singapore, we have DBS coming in as well, opening a digital asset exchange. So I think this year we're going to see a lot of traditional player from the financial institutions stepping in. And then secondly, we're going to see like a big boost of use cases within the decentralized finance world. Also topic of synthetic asset, lending, borrowing, loan, insurance, everything that in the capital market, we're going to see replicated in the decentralized finance world. So I think the market this year looks very bullish compared to the narrative of last year. So I think the sum up pretty much that.
Thanks, Sanjay. Wow, there's a lot to cover here. We're getting questions coming in that reflect a pretty diverse audience. We definitely have some people writing in who are traders and have some questions. We will get to those. But Sanjay, I think you touched on something that I'll segue over to Alan about in a minute here, which is we see the bigger institutions coming into this. And, funny enough, it was a few years back, I think it was the head of JP Morgan that, was calling, Bitcoin a fraud. And actually, under his own institutional roof, they were actually researching it and putting time into it. And they've come around and are into it, as are these other institutions. And I can certainly remember, as I'm sure some people watching this event right now can, back in January 2018, it was an early part of the month. We all had our wallets, and some of us got a little ahead of ourselves and thought we were going to be becoming millionaires as we saw those arrows go up, and still kicking ourselves for not cashing out on time because there was a bit of a crash, and we were all, I think we called it a crypto crack. We were like, really addicted to this stuff because nothing like this was jumping up and down and as exciting and potentially tormenting as trading in cryptocurrencies. So question for Alan, and this is for some of the folks in the audience who may be trading but don't understand. Tokens, cryptocurrencies, sometimes the same things. What would you describe? What do they represent? Are these shares in the company that, the decentralized autonomous organization you were talking about? And then after that, I want to go over to back over to Ben about traceability. And then we've got questions about XRP and a whole bunch of other stuff. We will get to those. But Alan, let's go back to you. Thanks.
Sure. So what do tokens represent? They represent value, a piece of value, and it could be different purposes. Bitcoin is a currency, defined as a currency. I think that thinking of it as a startup is probably a better idea. I call it the Ford Model T. So is that a good store of value in the long run? Maybe not. Is Nokia stock a really good store of value? It looked like it was, the only company worth investing in the telecom sector until the Apple iPhone was released. So, a token is is some kind of representation of value. There are different types of tokens in addition to currencies. Ethereum, the number 2 coin out there, it's a utility coin. It gives you access to the internet of value, which is very, very interesting. FYI, Ethereum is now generating fees of about 10 million on average every day, compared to Bitcoin's 3 million. This gives you a little bit of hint of, I think, what's to come. I think that better technology is out there, and we'll probably see a point now in which investors that invested in Bitcoin, conservative, slow-moving investors like funds are now looking at Bitcoin investments. Once they've made that, they'll then recognize, okay, we invested in the number 1 cryptocurrency. Why not the number 2? And we'll see likely big growth in Ethereum. But then there's all these other coins. And I would just say broadly, there's, of course, different coins, asset coins, security tokens that can represent shares. of stock, for example. More broadly, I would say that they represent some kind of value. And we're moving into this world in which we realize that there are different forms of value that go beyond the credit type of currencies that we're used to, right? So we look at regular currencies as the only currency, and then kind of some people think of gold as a currency, and that's backed by something kind of real, a commodity. Our vocabulary is expanding a lot more. Currencies are a lot more than gold and silver. In the past, they've represented, various other commodities, but also symbolic value. For example, boulders. They had a special meaning, for example, in some cultures, seashells. So, currencies broadly, represent our one breed of value, but we're expanding our view of what is valuable in the world. And then I'll kind of throw this idea out. The biggest value creation in all of human history will actually not come just from the unlocking of crypto. So we're seeing, massive value creation that will come from this, but actually from including the value of nature in our accounting systems, right? So can we think about a living forest having value? Can we think about biodiversity, healthy hydrological cycles, soil health as having value? There's a lot more value than credit-based money. And blockchain-based systems allow us to represent this value in different kinds of forms.
Talking about natural capital there, of course, and that's something I know you're an expert in. Ingo, Ben, I'm going to come back to you about traceability in a second on the technology, but first, Ingo, we've got a bunch of questions in here. They all kind of zero in on, what you were talking about, which is, have we hit the inflection point? You talked about, risky pioneering ideas that once they grab sort of 2.5% or more of the marketplace, that's when they can jump up. Are we there? And what does that mean for Bitcoin, Ethereum? Is Bitcoin going to go to $100,000 this year? Or these are things that are on people's minds, but going back to the context you gave us, where are we in that curve that you were describing before?
So we are past the inflection point. We are through the chasm now, evidenced by the fact that we are basically back at that we are right now at the point where we go from cryptocurrencies is something for innovators to cryptocurrencies are getting adapted by early adapters. And I think also, like other speakers have given plenty examples that this is now happening now. And my point of view is that this this cannot reverse. No? So basically, if that innovation diffusion theory holds, is applicable here, then the trend is up. The very interesting thing is, like in my slide, of course, the x-axis was the y-axis, was exponential, was a log scale. No? So it took us about, like if we're counting from about 2011 to 2010 to get to this point that we are now of 2.5 kind of like penetration of early money. We will get that, basically that growth literally every year. So we are going to be in for steep increases. Of course, there will be better products, even also better than Bitcoin and Ethereum, but not right away. Now, this is going to happen, I think, in only will really take effect in a bunch of years. Now, my personal view is that within a year or two, we could see 5x increase of valuation for the main cryptocurrencies now in the short term. Possibly a bit more for Ethereum than Bitcoin, also for a reason that Alan mentioned. There's just a bit, there's so much more. Ethereum is at the heart of so many more use cases, which will drive all that. No? But I would put it, the next 1 to 2 years at around 5x. No? What I fully expect is that there's going to be the iPhone in this space, like the next gen better product. I could imagine that this is going to be digital fiat, when the incumbent entities managing value, which is kind of like central banks and the traditional banks are coming in fully, that they're going to take a share of that. But I think I feel pretty good about, saying that at least all of these have at least a 5x potential. But of course, this is not investment advice. This is really just my private opinion and has like no relevance whatsoever, so just want to say that I decided for myself, I'll never give recommendations for buying a particular crypto asset ever again. No, you only make enemies doing that.
Yeah, we'll make sure you don't make any tonight, but do appreciate your views on innovation in this inflection point and putting it in historical context. Ben, you talked about the U.S. government, the U.S. kind of being behind on this, partly because of basically government fear of what this technology can do. But you've been looking at what it can do for good. We hear a lot, and I know we work in the community of law enforcement a lot, and they do kind of put up that sign to ward off Bitcoin being a coin that could be used for nefarious activities, can't be traced. And the first thing that occurred to me when I was starting to look into this and listening to people like Alan was that these are immutable ledgers, which means can't you always trace it? I mean, I know there's some privacy coins out there like Monero, et cetera, but can you speak to the traceability thing? Should we be scared of this? And what should we be more excited about with blockchain, smart contracts, et cetera? I mean, what can we start embracing? Are these all bubble pie in the sky ideas? The cryptocurrencies are real, we're trading them, but what they represent, are they here already, or are they in the distance? Thanks.
Well, so as far as traceability is concerned, it is. Any legitimate crypto is an open public ledger, which means every transaction that occurs for that crypto token is a public record. Now, it's public record against some, large 256 byte random account numbers, right? So who owns the account numbers? And that part can't be determined just by looking at this account number and saying this is person. However, you can, if you do know that this person was involved in transaction A, and then you can see that, that led to these transactions, it's not difficult. It's not even a big data problem. I call it a medium size data problem for anybody who knows where the beginning and the ending of a transaction was can fill out and see who all were the participants in that. And also, I don't think it's not going to be possible for people to track every crypto transaction as far as who was involved in it. But what governments can do, and it's probably their right to do, if you issue a currency, you have the, if it's a fiat currency that you regulate and own, perhaps you have the right to know who gets into that currency and when they get out of that currency. So, if they're converting from a crypto token to fiat, or from a fiat to a crypto token, they have all these KYC requirements. They have all these anti-money laundering requirements that are huge. They're outrageous. Matter of fact, they're putting banks out of business. Legitimate banks can't do banking anymore because the spread that they work from doesn't cover the cost of compliance with these outrageous laws. Like I was saying, before with cryptography, we made cryptography over 48 bits illegal in the United States. Right now, the SEC they have a rule called the Howey test that determines whether or not a crypto token is considered a security. If it's considered a security, it means mom and dad are not allowed to legally participate in it. You have to be a big institutional investor, and crypto kind of brings all kinds of investment opportunities to everybody on equal measure. That's one of the nice things about it. Everybody is absolutely on an equal grounds in crypto. And also it lets you reflect values. Again, like what Alan was saying, for things that you could not ever describe in any other way. It's a strategic implication of the technology itself. And the United States SEC, and unfortunately, Janet Yellen is one of these people who just got appointed Treasury Secretary under Biden. She is really hardcore. She's like, okay, crypto's okay, but we want to see who all does every single transaction. Well, ultimately, what that's going to do is just going to make doing transactions with fiat currency be higher friction, and so people will avoid it. So this is one of those situations where you squeeze hard and then everything just comes running through your fingers. The justification for all of this is, hey, people might do illegal transactions. Well, the money laundering that goes through so-called legitimate banks using fiat currency, the entire valuation of transactions that occur every day, legitimate or illegitimate, whatever you want to say in cryptocurrency, isn't even a rounding error compared to the illegal transactions that are conducted with fiat money. So it's a nonsense argument. Again, I'm hoping the U.S. will come around. I like Winston Churchill's quotes about Americans. It says, Americans will ultimately do the right thing after exhausting all other possibilities. I think that's where our government's going. Now, I like to contrast that with the Thai government. Believe it or not, and I was shocked, but the SEC in Thailand has got very forward-thinking perspective on cryptography or cryptocurrency. They were looking around the world and they looked at the way America did it and said that didn't make any sense for us. They looked at Canada and said there's some ideas, and they did some stuff. They have their own unique thing, and their real true focus is to just make sure that Thai citizens don't get scammed with bad coins, which is a focus that I think all of us who are in the industry should absolutely support. And so they've got a much more flexible model of what should be allowed to be conducted under Thailand and what's a legal currency and transaction under Thailand, far more advanced than the United States. The challenge in Thailand, and I was actually at the very first meeting where the heads of the SEC and the heads of the anti-money laundering ministry were together discussing this. And the anti-money laundering ministry does have some pretty severe KYC requirements. And I was helping with a client to underwrite an ICO that was helping to drive microtransactions. So we wanted to do stuff, transactions that were like even less than a baht each. And to onboard somebody and comply with the AML rules was going to cost about 300 baht to do that. So if you think you're taking like 2 or 3% of less than a baht transaction, how many transactions do people going to have to do before you can cover your onboarding fees? It drives a lot of the potential businesses and potential value to people who are unbanked and people who are poor in Thailand. A lot of opportunities for wealth and to do transactions they couldn't otherwise do. It makes it impossible to do that as a business. And what we were trying to argue for is like, say, look, you can watch the wallets. And as long as the wallets don't conduct more than, say, 10,000 baht of transactions a month, then you should just have a reduced KYC requirement, just a confirmed phone number or something like that. But the KYC requirements for 1,000 baht a month is exactly the same as the KYC requirements for 1 billion baht a month. They're no different. Now, I think the Anti-Money Laundering League realizes that, and they're starting to understand crypto. They don't quite get crypto as much as the SEC did. But the thing that I pointed out to them, they raised this very same objections, like, who's doing these transactions going to do it? We got every one of them. And oh, by the way, how do you know what's going on with Alipay? Jack Ma has a personal currency that's got a capitalization higher than the GDP of most nations on this planet. And it's all private. It's all his. And nobody else can see it. If he wants to change a record in it or say this person did this or whatever, it's all what he said. Nobody knows what's going on with that. Mm-hmm. And so they're just not holding it to the same standards. And I think something that is trustless, that's based off of math and logic, is something, it's equal for everybody, puts everybody on equal footing. That's the safe way to go. And in fact, I think all currencies eventually will have to be onboarded in some form of crypto ledger. It won't be the same way as Bitcoin, but that's where this is going. And as governments put on more challenges in getting in and out of your cryptocurrency with fiat currency, they're actually making their fiat currency more difficult to work with, and they're going to drive people to using crypto for legitimate reasons.
Right. So we see quite a dynamic going on right now. And I certainly know, having gotten back into it a little bit, like I'm sure other people did in the past few months, that the KYC, the know your customer requirements, definitely increased since I was last on these platforms in order to trade on these things.
Oh, yeah.
Your picture with your passport and today's date with the newspaper or whatever, and send it in. And then they usually get back to you pretty quickly, but they make you jump through a lot more hoops. actually more than.
God help you if you're an American, you're out.
Regular bank back in the States, yeah. So a lot of people don't know that. Sanjay, let's go over to you. There's a couple questions I've got here, and I want to build off of what Ben just talked about. Basically, the SEC in the States kind of came down on a company, XRP. Can you explain to us where things are at and where that's going to go? What does that reflect? And also, just building off of what Ben just said about Thailand, you're kind of a pioneer here on digital assets. What direction do you see Thailand going in this? Is it going to be, I don't want to say easier in the States, but what can people expect from Thai regulators? Thanks.
All right, sure. So first of all, regarding the XRP case, I mean, I can talk for hours on that. So I'll just keep it clean and simple, right? So basically, the XRP, actually the token itself, right? There's three misleading point about XRP. So first of all, people think that XRP would be used within the banking system, but actually Ripple has this subsidiary called Ripple Lab, where they actually provide the solution for the bank using their technology, but with no real actual usage of the XRP coin. So there's a lot of misconception on that part that when Ripple has been partnering up with many banks, people think that, they're going to be using XRP, the currency itself, to do the transaction. But actually, there's been no real purpose of XRP doing the transaction within the banking of that end. And then there's been a lot of, I would call it out a scam, but more on misinformation and misconception coming out from the XRP guys themselves as well, misleading information to some of the crypto holder and people within the industry. So what happened with the SEC and the XRP Ripple itself is that they have told Ripple XRP that they have not passed the Howey test, and they did conduct on offering without proper license, and they're having a case at the moment. So the case on that end is quite long and rigorous. So what happened after that was a lot of some of the exchanges that list XRP, for example, Coinbase has delisted them. Hence, the value of XRP even go down further. And I think a lot of exchanges are following as well on that end. So we haven't seen the full story yet. So I heard the latest one is that XRP is still discussing with the US SEC, and they're filing a case back and forth and doing some regular talk and update with the regulator. So it's an interesting case to see as well, like in this scheme of thing, that there's this thing called the Howey test by the US SEC basically. So if you don't pass the Howey test, your coin or your currency might be deemed a security unauthorized offering. So as we can see, like when many ICO project does their offering, they tend to avoid the investment with the US citizen, I would say. And then I think that after that, there's been a lot of crackdown on the US SEC on cracking down on the initial offering part. And moving back to Thailand itself, right? We have seen a lot of action taken by the Thai regulator as well. So I was, as one of the pioneer in this space, I've been talking to the Thai SEC since 2018. So at that time, there was no official royal digital asset law yet in this country. So they were trying to form this law. So I think they were looking at a lot of country like Estonia, Malta, US, Singapore, Hong Kong. And I think they did like their own model of it. So basically what we are seeing in Thailand is, first of all, there's three main licenses that they issue. So first of all, there's the exchange license, broker license, and dealer license for conducting all this trading. And then there's the other thing that they came up with is this ICO portal license to approve concept. So it's derived from, like, if you want to do an ICO in Thailand officially, you have to go through this ICO portal, and they'll work to what the financial advisor will do when you do an IPO, basically. So that is the whole concept they came up with, to prevent scam coin from coming out of Thailand, and to prevent a retail investor from getting scammed and buying an unsolicited token and not doing offering without proper licenses. So
Right.
we have seen them coming out with all these initial license coming out. Then there are company applying for all these licenses, people who have applied and backed out as well. They have maybe they disagree with the solution or license that came out. And lately they also came up with like 2 more additional license, which is the digital asset fund and digital asset consultant. So like we're talking about crypto prices right at the moment is kind of illegal now, say, since in the future they came up with a license already. So, but there's no clear requirement yet on that part. So in the future, you need a license to talk about the pricing of the cryptocurrency as well, officially in Thailand.
Okay, I want to come back to you in a second about your comfort level being in this area, this company you've got, and the whole sort of, I mean, are you feeling comfortable going out into the next couple of years investing in this? I presume the answer is yes, but I'm sure we've got some questions coming in about what to expect, specifically from Thai regulators. While you think about that, though, I want to ask a question back to Alan. What's stopping these giant institutions from acquiring massive amounts of crypto and bundling it with a toxic asset to sell on Wall Street as a security? They could collapse the entire crypto market. Interesting question. What do you think?
The answer is transparency, right? So as Ben mentioned, it's we have systems in which we can identify every single crypto wallet, every single transaction. The entire blockchain crypto community is one based on open source. That's why it's the trust machine, right? So any crypto that was bundled with something toxic would not be attractive to crypto investors. So I think that's unlikely going to crash the market. Probably the inverse is happening. A lot of companies will be saved by making a 1%, 2%, 3% investment in crypto. And that's kind of what's been happening. So you might have a bank with a lot of toxic assets that survives because they made a smart bet on Ethereum.
Interesting. Well, speaking of that, here's another question from the audience. For people who have missed out on acquiring Bitcoin and or Ethereum at a discount, because the prices are kind of high right now, at least for Bitcoin. And if the price continues to rise relative to the US dollar, does this panel think that the future of investment opportunities for crypto lay more with companies who build the infrastructure or operating systems behind the blockchain rather than investing? It's from Matthew Stevens. Anyone want to take a stab at that?
Well, I don't know if I can say about, again, I'm not the person to give investment advice, right? I told you when I was involved with Bitcoin and it got between $10 and $40, I just got the heck out. That was just crazy stuff, So don't take my advice as far as what's a valuation in fiat. However, I happen to be one of those companies that's building a lot of the foundational infrastructure to support what's going on, right? So what does that involve? We have these things like on Ethereum, they call them smart contracts. These smart contracts can only be about 700 lines of code long before they won't fit onto a block. They're stupidly simple. They can only do very simple applications like tokens. And by the way, the languages that they're built on, Solidity and an improved one called Viper, are just horrifically wrong and awful for doing this. Our kids, in another couple of decades, are going to look back at us and say, wow, you made financial assets using a language that had absolutely no type system to support the safety of your application being correct. And we'll go, yeah. And that's like the World War I fighters and stuff. Frankly, the technology that we are at right now is similar to like what we had in the late 70s for PCs as far as the capability and expressiveness. What we want to build is crypto contracts and applications that are decentralized that can do things like, if you want to make a true autonomous organization. Let's say that I'm an investor with my partners and I have some anti-dilution clauses so that if somebody else invests, I'm going to get additional shares or tokens that represent equity into the organization. Well, all that could be built into the contract to automatically happen. So I don't even have to know that somebody else invested necessarily. The money comes into it. It's under the DAO organization, and immediately shares get issued. All this kind of stuff is what we're looking at, and I've actually worked it out. We're looking at, we need at least 3 to 4 orders of magnitude more complexity potential to be represented in the technology to be able to do those kind of apps. Friend of mine's company that I've consulted to in Singapore is called legalese.com, and they're still in an early development stage. But what they ran into, they actually ran, my friend Meng Wang, he ran one of the first successful startup incubators in Singapore. And it's one of these things where you come with your startup company for 100 days, you get a little bit of investment. At that time, it was like, I think 20,000 Sing dollars, and they moved it up to 50,000 Sing dollars. And then at the end, they mentor you, and at the end, hopefully you get some funding from angel investors and whatnot. And they were very, very successful. Problem was that to file the legal documents to legally give them the $20,000 cost you $17,000 in legal fees if you did it right. And so what Mang realized is like, this is crazy. This is kind of cut and paste. There's some differences and stuff, but it's all logic. It's all logic. So they're inventing a language, a logic language, to try to describe in a formal manner the way you would a program, and create contracts with it. So like in a regular program, you write something in a formal language, you compile it down, it executes on the computer. In their case, they want to compile it down, and it's going to generate the text of a human readable contract, which is using the exact nomenclature that the lawyers and judges would expect to see in that particular jurisdiction. And so you're able to write correct contracts that are enforceable. Well, and so that gets enforced in a human real world court and adjudicated there. Well, if you have a distributed autonomous organization, you don't need that. You just have the contract enforce itself through execution. And then you can use, the same kind of organizations that do arbitration or whatever to maybe deal with exceptions. And so there could be, so basically code eats law. And these are the kind of things that we're talking about. So, what's that worth compared to what you might speculate a Bitcoin or an Ethereum token to be worth? I say is, if you're looking at the future of the impact in the world, it's not going to be in the fiat price of the asset. It's going to be on what new wealth capabilities are created from it.
Well, what you're basically speaking to is what this technology can do for efficiency. And that is going to, like other technologies, cut out middlemen and reduce friction, save people time and money. And that can also be something that people might not understand or be afraid of. You spoke also to, somebody spoke to these, the bigger coins. Somebody's asked a question here, put on the screen. I think it's a burning question that we all have, which is, are Bitcoin and Ethereum the only two cryptos that will progress from this point onwards, or are there others, altcoins, perhaps still in development, that will come to influence our lives in the years to come? Dave Tapp from there.
Steve, can I just come back to the last question and then maybe also talk about this one because it's related?
Sure. Let's go to Ingo, and anybody else wants to jump on that question right after, and then we're going to round up here pretty soon. But we've got. Let's go to Ingo.
Yeah, I want to make 2 points about that previous question. I mean, one thing is that a lot of the infrastructure that's getting built is built by teams that do not fall within the traditional definition of what is a company, because actually these teams reward themselves, or their value is baked into the token that they are creating, for which they create the infrastructure. And this goes to this last question. there are many new tokens that are based, for example, on the Ethereum token that develop a certain use aspect for that Ethereum and smart contracts allow. No? Very specific. Like I think a big champion, one that I'm following is Polkadot, no? Which creates basically a gateway between like the real world and the blockchain world. And there's a big developer community kind of like around that. No? And then back also, like very much like when we had the internet, there were a lot of agencies who helped companies develop their website. No? And some of them became quite big, but they never became, like super champions. No? But like I think Rocket Internet from Germany is maybe one of an example in that category that actually made it quite big. So there is such opportunity as well. No? That's the second point. And the third one is, and this is, I want to give an analogy from my space, the energy space, like the one that I spend most of my daily time in. What we are doing a lot now is we're carrying out climate risk assessment for companies. That means we're looking at traditional companies and assess whether they have the strategies in place to make them future ready for a world that is run on decentralized renewable energy, because that will impact their future share price. No? And increasingly, climate risks are priced into the value of such companies. No? So there are companies that are like very well positioned, like for this low carbon world. And there are others that are not. No? For example, a bunch of years ago, European utilities that were trying to fight the energy transformation in Europe, they lost 40-50% of their market, of their valuation, listed companies. No? Don't want to mention names, no, but it's like the big players, it happened to them. I can imagine that maybe not now, but in a few years, it happened, let's say, roughly a decade ago, no? Basically, when it was clear. So when the share of renewable energy in Germany was 10 to 15%, and that flip happened, no? Basically, the status quo changed. That means the world understood we are going to do this. Now we are going to go to this replacement of fossil with renewables is going to happen, right? There was this moment, and that was the moment when a lot of these companies lost tremendous value. Actually, I think also Alan has done some interesting analysis around that case. No? But my point is that the same could happen in relation to the use of crypto. Basically, that there's going to the moment where, as part of a financial due diligence, for investors, they look at, do you have a digital asset strategy? Are you ready for that future or not? Because that might impact tremendously the value and because the competitiveness of such companies going forward. Now, this moment comes when the cryptocurrency penetration reaches about 15% of liquid assets, like the narrow money M1 definition. So I would give it another 2 to 3 years. No? But there are very interesting investment plays, like ways to kind of like invest to make money that is based on the success of crypto.
Thank you for that. Let's go back to our last question, though, and basically everybody's talking about Bitcoin and Ethereum and what they represent. Are there other coins in development that one should get excited about? And perhaps in that same context, could you please tell us more about NFTs and how they are used? I think we can couple this question to.
I could go for that if you want, or somebody else wants to jump in. Okay. So, so right now, I would say one legitimate crypto that's fairly popular is Bitcoin Cash, which actually the Bitcoin Cash people and the Bitcoin people will argue amongst themselves as to who forked from whom, but Bitcoin kept the name, so I guess Bitcoin Cash is the fork. Bitcoin Cash said we want to be a currency, and the Bitcoin folks said we want to be a store of value. And so they model their system. So it takes a long time to do a transaction on Bitcoin. It's more expensive, but it's got a bigger block rate or whatever. So it's kind of like where you hold your assets in the bank. But if you want to go spend it, you want to hold money in your wallet, money that you may not be afraid to lose. Bitcoin Cash can do transactions faster than a credit card. And for I mean, the fee is so low, it's not even measurable. So far cheaper than you can use a credit card, far cheaper than you can use a Bitcoin. So it's a completely legitimate. It's actually using the exact same source code as Bitcoin. Now, is there going to be? Everyone argues. Everyone talking about crypto is going to which coin is going to win, and in the software development and technology thing is like which language is going to be the language to do it. And the answer is that there's not going to be any one winner. In fact, as crypto ledgers become the thing and decentralized organizations become the thing, everybody's going to have a coin. It's kind of the same way as like a company having its own bonds that it's going to issue, except for these might have voting rights. They'll have different rights depending on how your organization works. Every single person is going to have one. Question is, how are you going to measure the value of that? And from there, right now, the token that seems to be the one is Bitcoin, right? As that is the store of value. It's kind of like it's the gold standard of tokens. It may not always be that, but I don't see anything else that's even approaching or trying to replace it legitimately. Other tokens are going to be bringing new tactical and strategic capabilities that Bitcoin is not designed and will never approach or try to do. So that's really what's going to be going on. So there's going to be more coin. There's going to be as many coins or more coins than there actually are people using them in the long run. That's only when the technology is there to make these things safe and secure and easy to reproduce and to actually be able to represent the value and have lower cost transactions than doing it in any other manner.
Okay. Listen, we could go on and on here, especially with this expertise, but I'm going to close this out here soon. I think I'd like to get just a statement from each of you going around. I mean, if somebody walked in the door right now, and I'm sure it does happen to you, and whether they are experts in this subject matter or novices, I'm sure some people's heads are spinning watching this. Others know exactly what you're talking about. Others are sort of in the middle and they're just all over the cryptos, but maybe don't know what they represent. But if somebody were to either be scared to jump in or just didn't get it, what would be your sort of statement to them right now? We're going into 2021. What's your advice? Not necessarily recommending them, what to invest in, but generally speaking, this realm of cryptocurrencies and blockchain. What would be your advice to your kids?
Okay, I can start.
Please, Ingo.
So my kids are 12 and 21, and both of them actually got ready for crypto wallet now. So my daughter has one. My son, even though he's so young, he will have one soon, because I want them to experience it. And my recommendation is take the money that you would otherwise spend on video games or booze or going to the restaurant every now and then put that into a wallet, and then start with it. My view is it's here to stay. Only 1% of the people who have savings above $10,000 in the world currently have one. Though there's this massive potential. It will come. I actually, basically, the easiest answer is, I think that, especially like young people, they need to be fluent in the language of digital assets. And the best way to experience is by trying it out, by learning. No? So put money that is basically that you would otherwise spend on things that you don't really need, and try it out.
Very good, Ingo. Who wants to go next?
So,
Alan, what's your Sanjay? Go ahead.
All right. So my advice actually is, when I talk to anyone not familiar with the crypto space or the concept of digital asset at all, I always there's always a question, when do I buy? What is the right price? When do I sell? So normally my advice for super newbie is probably put whatever you can that you can afford to lose. So basically, for some people, they can afford to lose 5,000 baht, 1,000 baht, 10,000. Some are even more than that. So just try putting in a certain amount and play around with the concept of your private wallet. Move your coin around to see how it works. Do some research on what exchange to use, how to store your digital asset. just play around with it for a while. Then once you're kind of familiar with it, I probably advise people to buy probably only the top 2 coin as a long-term thing, like Bitcoin and Ethereum, and they can buy it on a dollar cost average once a month. And you can see that if you continue doing it for like a year or so, in most likely scenario, you're gonna see some positive return on that value, I would say. And this strictly non-financial advice, so it's just try to play around with it with the money you can afford to lose, basically.
Thanks, Sanjay.
I'll go
Ben
next,
or
I
Alan?
guess. Let Alan have the last word.
Okay, Ben.
So what I would tell people is first educate yourself. Read these 2 books. You got The Scandal of Money and Life After Google by George Gilder. Scandal of Money talks about the whole issue of information theory of money and what the issues are with the Fed and why you need stable currency, right? It's an existential issue. But Life After Google talks about the bigger impact of what crypto ledgers are going to have in the decentralized economy and how that's going to impact the world. If you read those 2 books, you will understand what the potential is and why it's going to be coming sooner than later. And if that gets you excited, then okay, go invest in some of these companies that are building the technology that's going to allow that to happen. Not just people who are building yet another coin, but people who are really innovating in the tech space. And then I would just echo what Sanjay said as well. If you feel like you want to speculate as far as holding crypto as an asset, just get a little bit of money. Don't forget about trying to price it or time it. Just a little bit money as you can that's big enough to make it worth it. Because remember, you gotta pay attention to the exchange fees or the transaction fees. Make sure you haven't lost 20% of your money just by getting it in there in the first place. But just throw in a little bit at a time and just accumulate it and just hold it forever until you see people start pricing things in terms of the currency that you own rather than fiat. At that point in time, it will have achieved a price and you can reasonably get in and out of it as an asset or a currency as you desire.
And with the technology, Ben, I mean, some of us are old enough to remember, early 90s, people talking about the internet, getting your emails. Some of us were scratching our heads and people were like, what's that? And then within a short period of time, everybody's like, oh yeah, the internet. Are we talking about the same thing here? Is it? It's going to make the internet, it's going to dwarf the impact of the internet economically, socially, and government-wise. And one of the reasons why it's going to do that is because unlike the internet, security is built in to crypto. And security is the thing that separates what is absolutely a requirement for you to build an economy from. And you see all the issues that we have with our web technology and stuff with security and people getting hacked and all that kind of stuff. You can't put an entire organization into something that is credibly going to be attacked and evaporate, right? There was this famous DAO hack of the early Ethereum system that was literally 3 lines of code. And if this line would have been over here instead of down here, the hack could not have occurred. And I've got to talk where I describe how that worked. But the technology has to evolve. Security has to be built in, designed in. Once that happens, the internet's going to be an afterthought. Thanks, Ben. Alan, what do you say?
Cool. All right. So my message is 1,000 flowers will bloom, maybe 1 million flowers. Build a diversified portfolio. Set aside money that you can afford to lose. Probably somewhere between 5 to 20% of your overall wealth, I think makes sense. And you can build a portfolio with sort of the large cap Bitcoin, Ethereum, Polkadot, and Stellar, and a few of the other significant coins in the top 20 list. And then, you'll have some mid caps and some small caps that are riskier, be diversified. I think it makes sense to invest in a portfolio of stable coins as well. So for example, having a balanced crypto allocation where, let's say you aggressively put 20% into crypto markets, digital assets, 10% might be a crypto basket that's volatile, and 10% might be a basket of stable coins. And then you can generate interesting returns, either by staking, lending, or putting them into automated market makers like Uniswap. So I would highly recommend checking out the story behind Uniswap right now. It's one of those amazing crypto stories, and that's been driving a lot of the boom that we're seeing, as Sanjay was mentioned, this DeFi space that is really emerging. So there's tremendous opportunities here. You don't have to put all your wealth into it, but the value creation, as Ben was alluding to, will be far, far greater than the internet. And so this is a train you do not want to miss. And it's a great way to reduce your risk and diversify your risk as well.
Great. And yeah, just coming back to the beginning, I mean, we talked about, how my organization got into it by talking to you, Alan, and basically, using this technology that Ben's been talking about and developing tokens that are, in our case, based on the Stellar platform to track and reward impact. And in your case, you also said to attach value to more than just, buildings and things like that, but actual natural capital, trees, fish, living things. And I think that's a really interesting direction that you're going in. We got more questions coming in here, which suggests we should probably do a part 2, but I'm going to sneak this one last one in. Hot trade or both? If both, what is the safe ratio in your option? Here maybe we should go to Sanjay on this. What would you suggest to a client, generally speaking?
So basically, from my own strategy, I have 3 portfolio that I use. So one is a complete hodl portfolio where I keep my Bitcoin and Ethereum on the long run. So that's probably 35% of my portfolio. That's in my ledger that I never looked at since like 2017, I would say. And my second portfolio is where I held some big market cap coin, Bitcoin, Ethereum, and then some mid cap coin. That's probably around 35% of my portfolio as well. And then the rest of like 20 to 30%, I do some DeFi related stuff, play around with new farm platform, and speculate a bit on some moonshot coin that I think might be worth a while. So I think it's a combination of both, but honestly, I'm not a day trader, so I don't have time for that. So even if I speculate on a certain coin, it'll be on a weekly basis or monthly basis rather than seeing the chart. But I use the chart as just an indicator on which is the right time to enter. That's all. Yeah.
Right. Yeah. Day trading in this market can be exhausting, I hear.
Yeah. Oh, and by the way, I forgot to mention that someone was asking about NFT, right?
Yeah.
Actually, I'm doing a live session tomorrow on my own channel with the founder of Flow Blockchain. So they are one of the strongest NFT related project. So I'm talking to the Mike, which is a co-founder of the project. So just in case anyone is interested in NFT talk tomorrow.
Okay. Yeah. No. Thanks for going back and speaking to that question. That's good to know. So listen, we're gonna finish up here. I want to thank everybody for joining. Just a couple points. So first of all, I recognize we're a bunch of men on here. It's just the way it happened. We did recruit widely, but I'm so glad we got these experts here. We are doing this virtually because of the COVID situation. The FCCT is open during the daytime. It's got dining going on. They're doing a social distance thing. So please, anybody who's, it's not closed, but they are respecting government regulations, which are starting to relax a bit. So hopefully what we can do is a part 2 back at the club, beam Alan back in. Some of you folks are in Bangkok. We'll diversify our audience a little more and do a part 2, because I think there's a lot more to cover here. And I think what you've all agreed to here is that this thing is here to stay and is only going to get bigger. So we got to jump on it. And I want to thank David Foster in Jayen Productions for producing this event tonight. It's been seamless. Thank you, David. And want to wish everybody a good day and good evening wherever you are. Thank you.